Your wealth deserves stability, expertise, security. Your wealth deserves LGT Cresto, private wealth with over a century of global heritage.
Welcome to the Global View on this Friday. Well, let's get right into it. There are further signs that the US labour market is maintaining its strength, with a number of Americans filing new claims for unemployment benefits unexpectedly falling by 9,000 last week. Meanwhile, the Fed's Philly Manufacturing Index showing continued weakness, and the property sector remaining brittle, with existing home sales dropping 3.3% in June. And the jobs data has boosted expectations the Fed may continue hiking interest rates if the economy remains strong. This saw the 10-year Treasury yield spike more than 10 basis points to 3.84%, and the 2-year was up to 4.82%. And the US dollar gained against most major currencies. The Aussie dollar, that's trading around 67.8 US cents. Well, there is a focus in the US earnings season, particularly on mega cap tech stocks, given how well they have done in the first half of the year. To look at what has been reported so far, with we've had both Netflix out as well as Tesla, I should say, and for a look ahead at some of those other big companies, I caught up with Brad Gastwirth from Unearthing Opportunities.
A lot is starting to hit the tape, and we're getting a lot more into earnings season. And overall, the numbers haven't been terrible. I mean, the numbers weren't that big of a surprise with Tesla. We've talked about this numerous times on your program, along with other programs, that the price cuts hit margins. We've seen margins go down, and that was really the story this quarter. Obviously, there was some interesting commentary about Musk basically saying that he's trying to understand where we are in the economy. Are we at a recession? Are we not? And that's played into that price talk commentary later in that earnings call. I do think you're going to see margins continue to get hit here in the next few quarters. I think that's going to put somewhat of an upside cap on the stock, and I wouldn't be surprised to see a little bit more downward trajectory, which could give investors a little bit better of an entry point here in that stock.
So Elon Musk talking about he's quite content to keep those price cuts in place. He's looking at the longer term. In particular, its play towards those autonomous vehicles, the self-driving technology. And that, I guess, goes to your point, perhaps, of just how the company is positioning itself in terms of AI.
Yeah, you're absolutely right, Andrew. And I think you just hit that nail on the head. I think many people look at the company as this incredible electric vehicle company. And, this is a technology company. And again, you and I have talked about this numerous times, that, it's not valued like an electric car company. It's valued as a leading technology company. And I think there's some interesting things that Tesla wants to do and that Musk wants of Tesla in the future. And right now you have the company really with just the electric vehicle, being the driver. But when you look forward on autonomous vehicles being something that's really going to play into the thesis, along with robotics and some other, generative AI type stuff, I think it'll be interesting. I think we're still going through a little bit of a growing pains with how fast they're selling these automobiles, and you're not ramping the service area up as much. That will cause some investment confusion. I think that will cause a little bit of an alienation to the retail side. But that being said, I still think that they're a leader in technology. I think the valuation in the near term did get ahead of itself, which again, I think we'll see a better entry point here.
Brad, another big result, Netflix. Quarterly revenue, they're falling short of estimates, although the number of subscribers has bounced considerably. What are you seeing for Netflix at the moment?
Yeah, and that's the really more important point there, Andrew, is the subscriber number, and that number wasn't that bad. There's a big tug of war here with that company. Content is still king. I think Netflix got ahead of itself. If you look at last year, where they were spending way too much on content, they're still bidding too much on content currently. I think that's really the bull bear thesis is how much are they going to spend for acquisition cost of subscribers. But there's a bigger play here with advertising costs going up. I think they can make some more money with advertising. I like the subscriber number, actually. I'm getting a little bit more interested in looking at that stock as an investment. I've been away from it over the last probably 6 to 12 months. I think if it continues to come down, I think it could be interesting depending on valuation. But I like seeing subscribers go higher. That's really the important thing. But first and foremost, how much are they going to spend on content? Because that will go into profitability.
Brad, let's look at the other list of stocks that you're focused on at the moment, particularly ahead of their reporting. Microsoft, what are you seeing here at the moment? I do see that you're saying that is a stock you do need in your portfolio right now.
Yeah, absolutely right, Andrew. I think if you're an investor and you're looking for AI exposure, artificial intelligence exposure, there's certainly a handful of stocks, and it's been a narrow leadership, and not only I've talked about this on your program, but many others as well. But Microsoft has to be included in that conversation. If you look how much they've invested in artificial intelligence and what they've been doing with their suite of Office products, this is a major change and inflection point, in my opinion. The stock's hit an all-time high because of it, and adding these AI services to their suite of Office products is a home run for me, in my opinion. I think the stock is going to make new highs consistently over the next 12 to 24 months. I think this is a must-own large cap stock and has great exposure to artificial intelligence.
We look at the battle at the top of the moment, just as far as particularly ChatGPT and those chatbot functions, with Microsoft leading the way there with what it's offering and integration into its Office products, as you mentioned there. What are you seeing with Alphabet at the moment? They've still been playing catch up.
Yeah, Alphabet is still doing very well. So you can't discount Alphabet and what they've been doing and what they've been adding in some of their add-ons from their product suite. So, if you look at the leaders and who's going to come out of this next major transformative shift in technology, AI is revolutionizing everything, and it's moving much faster than most people would have expected. Alphabet is spending a tremendous amount in it. Microsoft is spending a tremendous amount. Salesforce.com, Meta, these companies, the ones that are spending in this technology are going to benefit. Alphabet has been a leader in spend. They're going to do well. So Microsoft, it has a little bit of a different play with the suite of products for the enterprise side. That's going to boost their revenue significantly and profitability significantly. With Alphabet, you have some interesting services that will also help them. It's a different play on an advertising front with Alphabet. Microsoft is more of an enterprise play with their suite of products.
Brad, elsewhere in this space, Nvidia has clearly been the outperformer, among many outperformers, I should say. What are you seeing ahead for the company?
Yeah, Nvidia is the leader with artificial intelligence chips. I mean, they are. And if you listen to Jensen, their CEO, he gets very enthusiastic every time he has this conversation. And the other interesting thing is one of the interesting parts of their capped guidance, so they couldn't actually offer as much upside previously because they were limited on capacity. But with the global economy slowing down and chip demand slowing, they were actually able to secure more capacity, which gave them the ability to offer more upside with their guidance. Nvidia is in the right spot. They have the significant lead in this technology on the semiconductor side. So if you're looking for a semiconductor play for artificial intelligence, they are by far the leader. They aren't going anywhere, and they are going to be continuing to be a great large cap semiconductor investment.
Brad, you point out a stock less spoken about in the AI space at the moment is Splunk. What are you seeing here?
Yeah, so you know what? It's a little bit less discovered. And Andrew, it's a good comment to bring up because, a lot of people talk about it. And I'd say a few years ago, or maybe 3 or 4 years ago, it was one of those stock de jours. It was one of those, emerging software companies that many people still didn't know that much about. But what they're doing with data analytics and with artificial intelligence and machine learning, they are right in the sweet spot, and they are a leader. They're starting to make some new announcements with partnerships, Microsoft being one of them. They have this user conference coming up, which historically has acted as a catalyst for shares of that company. I think they're in the right space. They're a leader. I don't see them as a standalone company in 12 to 24 months. I think somebody grabs them. I think they're a perfect opportunity to be acquired, given their leadership with machine learning and data.
Brad, another stock that we often talk about in this space, Taiwan Semi. What are you seeing with this stock at the moment? I guess you're sort of factoring in what's going on in China too more broadly?
Yeah, so Taiwan Semi is by far the leader in fab. So they are the company that makes these semiconductors. And going back to that Nvidia comment, and just to reverse a bit, they were they had full utilization, meaning they couldn't add any more clients. And this was also an issue with all of these companies that wanted to build more chips. So as the slowdown on a global basis happened, and China in particular, where Taiwan Semi has exposure, they've offered up more capacity. And that's why a company like Nvidia is able to get to the upside. But for them in the near term, because of the slowdown in China, because of the slowdown in overall handset builds, handsets being the #1 global unit provider for semiconductors, they offered a little bit weaker guidance. Not a big surprise. This is one of the reasons why I've mentioned semiconductors as a whole. I've had more of a cautious viewpoint towards. But you're getting to a point where we might be getting to inflection where all this news has been priced in. We're not there yet. Taiwan Semi for a foundry is by far the leader, and they have some positive spots. What they talked about, their 3 nanometer, which, not to get too deep on the technology side, but their leading edge technology is ramping nicely, and that's going to help them with their gross margins. It's a company I'm taking a very close look at because I like their position as a leader in building semiconductors, and I think we're close to being out of the woods. We're just not there yet.
Brad, let's round it out with Amazon, another behemoth. Look, this is a more diversified company, but does it still, is this contingent, particularly its profit growth going forward, on consumer spending at this point?
Yeah, it's a really good question. Is it contingent on it? I'm not sure it's contingent just on consumer spending, because you have many parts to this, this conglomerate. So on the marketplace side, for sure, consumer spending is a major driver of that company. But if you look at AWS and some of the other businesses that they run, those are not necessarily on the consumer side, that's on enterprise, and those are going incredibly well. I think Amazon is another must-own large cap stocks for the next, decade. I would be surprised if it's a standalone company in a decade from now, but I do think that some of the parts are worth more than the individual company right now as it's valued. So I think if the government forces it to break up, that's worth more. You're going to make more money as a shareholder of Amazon.
Brad Gastwirth from Unearthing Opportunities. Stay with us. The Open is just around the corner.